In a market that's, well, let's just say it's complicated, one company is somehow posting double-digit growth pretty much across the board. So today, we're going to deconstruct Roper Technologies' absolute powerhouse of a third quarter for 2025 and figure out their secret. Let's get right into it. And this really is the big question, isn't it? I mean, growth like this doesn't just fall out of the sky, especially not in this economy. It points to a really powerful, really smart strategy at play. So what exactly is Roper's playbook? Well, let's start with the big, flashy numbers. Okay, so let's get right to it. The headline numbers. We're about to see a trio of stats that honestly paint a super clear picture of a company that is absolutely at the top of its game. First up, a massive 14% jump in total revenue. And just to give you some perspective on that, in this kind of slow growth economy, anything in the high single digits is considered really strong. So yeah, 14%, that is simply outstanding. And get this, it's not just empty growth. Their earnings grew right alongside that revenue at a powerful 13%. That tells you they aren't just selling more stuff, they're actually making more money on every single sale. That's the key. But here it is. This is the number that really shows you the incredible health of the business. Free cash flow, up a whopping 17%. This is the actual, real cash the company's generating, and it's practically gushing. And the CEO, Neil Hun, he really hits the nail on the head with this quote. He uses the word durability to describe their business model. And that is the key theme here. Roper focuses on these niche software businesses that have recurring revenue and that creates this incredibly stable, predictable foundation that just performs well no matter what the economic weather is doing. So how in the world did they pull that off? Yeah, this was definitely not luck. It is the results of a very clear, very deliberate two-part growth playbook. Let's break that down. Okay, so this chart right here really breaks it down for us. You can see the two engines that are driving that 14% growth. 57% of it, the bigger slice, came from strategically acquiring new businesses. The other 43%, that was pure organic growth, which just means they made the businesses they already owned bigger and better. It's a really powerful one-two punch. All right, now for the fun part. Let's peel back the layers and see exactly where all this growth is coming from across Roper's different divisions. So first up, let's talk about their biggest segment, application software. Think of this as the core engine of the company, providing super specialized software for industries like legal and healthcare. And it's an absolute juggernaut, growing an incredible 18%. And a perfect example of this in action is a company they own called AdaRent. This legal tech business is just firing on all cylinders, riding that big software as a service wave and really leaning into AI innovation. And that momentum just keeps on rolling with their network software segment. This one posted a super solid 13% revenue growth. Still fantastic. The real star of the show here is DAT, which is their freight and logistics network. They're growing through their own innovation, but also through a really smart bolt-on acquisition of a company called Convoy. And stick a pin in that because we're going to come back to it. And rounding things out, their technology-enabled product segment delivered a steady 7% growth, with particularly strong results coming from their medical tech businesses, like Verathon and NDI. So that's a look back at their last quarter. But a strong performance is also about looking forward. And Roper's future strategy seems to be centered on one incredibly powerful technology, artificial intelligence. I mean, that is a huge, bold statement. They're not just playing around with AI or experimenting with it. Their stated goal is to embed it into the very DNA of every single one of their businesses. But what does that actually mean, in the real world? Well, this slide right here is the perfect illustration. Remember DAT, that freight marketplace we talked about? They're using AI to totally transform the process of booking a shipment. What used to take hours of phone calls and emails is now being automated down to just minutes. And eventually, they say, down to seconds. That is a total game changer. Okay, so we've seen the powerhouse performance and their focus on the future. Let's look at how they see the rest of the year playing out, and maybe more importantly, what they plan to do with all that cash they're generating. This is the question everybody's asking, right? After a quarter like that, what does the company expect for the grand finale of 2025? Okay, now hold on. At first glance, you might look at this and think they've slightly lowered their forecast. But here's the key thing to understand. It is not because of weak performance. It's the direct result of them investing in those new acquisitions. This is a classic case of spending money today to make even more money tomorrow. It's a strategic move. And if you need any more proof of how confident their management is, just look at how they're planning to use their cash. They've just authorized a massive $3 billion share buyback program. They have over $5 billion ready to go for more acquisitions. This is management voting with their wallet, signaling in the strongest possible terms that they believe in their future. So that's really the big takeaway here. Roper is a cash compounding machine. They have a proven playbook that works, and they have billions of dollars in firepower ready to deploy. They're not just playing the game anymore. They're actively trying to change it with AI. So the real question isn't if they're going to make another big power move. It's what that move is going to be and which industry they're going to transform next.